Joining me now from Washington is Ron Phipps, the President-elect of the National Association of Retailers. Ron, thank you very much indeed for joining me so early in the morning. First of all, a 50% chance of another housing slump. That's what we're hearing. What's your response to that?
The numbers don't support that in terms of recent past. What we're excited about is sales are actually up 7% from a year ago, and the median price is really stabilized. We're at about $165,100 US, and that's only down about 1.8%. The whole purpose of the tax credit, which is expiring shortly, was to stabilize the market, and we're really confident that it's done what it was intended to do. Obviously, the housing market is fragile, and employment is really critical to sustaining the housing recovery. But we see good signs right now, and we're encouraged that this transition is very gentle, measured, and we're going back to a normal market.
Now, the tax credits, as I understand them, are particularly important for first-time buyers. But surely more important than these tax credits are the fundamentals about unemployment, about banks not lending. How's that shaping up?
Andrea, that's absolutely true, and that's why we watch the unemployment rate so closely, because employment really is a precursor to the housing market stabilizing. And what we're encouraged about is that the employment numbers right now are good. Now, you will see some offsetting numbers because the employment numbers lag in terms of their impact on the housing market. So that the net result is that the employment is getting better. We think that will continue to stabilize housing values. What I'm encouraged about is we're seeing increased sales activity in almost every market of the country, and that's most encouraging. That also indicates the prices reached that point where the buyer stepped in and said, this is good value again. And we needed to get back to those fundamentals, those common sense things, saying sellers need to price carefully, and buyers will recognize a good price and a good opportunity.
Now, as you point out, of course, the property market isn't one great big homogenous market. What about high-end? How healthy is the high-end market? Presumably not that affected by this tax credit.
It's correct. The impact of the tax credit really was the entry-level market, first-time homebuyers in particular. And what's amazing is about 47% of all sales this past year were for that particular target group. When you step up to the upgraded market, the next step up market, and then the higher end, it is softer. One of the most important things that we know about real estate is like politics, all of it's local. So you need to look at your specific market. There's certain luxury markets in the country, certain higher end markets that are really, really strong. There are others that are still correcting. And once again, you really need to look at what the specifics are. To make a universal statement about that would really be inappropriate. I mean, look at the immediate market.
Okay, Ron Phipps, thank you very much indeed.